Hello, this is Greg Giardino,
And I'm Allison Hall.
and this is It's Your Smarter Money. And we're going to review with you today what are some of these last minute end of year financial planning strategies, some wealth tips that can really help you. So let's dive into this. So, for starters, for those of you who are enrolled on Medicare Part B, you may have received in the mail back in November something called the Notice of Initial Determination, which basically will tell you if you'll be assessed those pesky Medicare surcharges, also known as IRMAA, which stands for Income Related Monthly Adjustment Amount. So as you can see here, there's a chart, but before I get into that, I had asked AI to generate a picture of what IRMAA would look like if they were a person. So here we are. We have Aunt Irma here. As you can see, she's miserable. She's no fun and she's really expensive. So just how expensive? Let's look at the chart here. So you can see for somebody married filing jointly, if your income is too high, for example, more than 749,000 and change, you will be assessed an additional $487 a month per person. So these IRMAA surcharges can be quite the sticker shock. And what they do is they look at your income from 2 years in arrears. So they're going to look at your 2024 tax return to determine what your IRMAA surcharges would be in 2026. So what can you do in this situation? You don't want to pay IRMAA. Well, perhaps there's a way to appeal it. You have to have two criteria. The first, you have to have a lower income threshold on this chart by at least one income threshold. So if you're normally in a certain threshold, you have a lower income year. Let's say you retired, you got a divorce. Those are things that could potentially allow you to appeal IRMAA. So once again, you have to have a lower income threshold by one movement, and you have to have what's called a life-changing event. Now, in order to do that, you're going to have to file what's called SSA-44, which is the appeal form for Medicare surcharges. You can fill it out online. It's really easy. And one question that Allison and I often get asked is, well, I had a one-time big income event. I sold my business. I sold some real estate and I got a huge capital gain. Can I actually appeal IRMAA? No. Uh, no can do. That is a not a life-changing event that would qualify. So definitely keep that in mind. So Allison, I'm going to swing things back over to you. Are there any other tips that perhaps folks can take advantage of before year end?
So, with the end of the year coming up, we often get a lot of questions about gifting. So, for 2025, the annual gift exclusion is 19,000 per person, which means that you can give up to that amount to as many individuals as you'd like without needing to file a gift tax return. And it's actually per person on both sides, which is to say that you and your spouse can each gift $19,000 to one person, effectively making a $38,000 gift without there being a reportable transaction. It's a simple and really effective way to kind of transfer wealth, but the timing of it does matter. One of the key details that's often overlooked is that the gift only counts in the year that the donee or the recipient deposits it. It's not when you write the check. So if the goal is going to be a 2025 gift and you're using a check and not an electronic method like a Zelle or a Venmo, make sure that the recipient deposits it before year end or it might not count for the right year. Also, keep in mind that certain payments aren't actually considered gifts at all. Direct payments made to schools for tuition or to medical providers for qualified medical expenses are completely exempt from these gifting rules. So don't accidentally count those as part of your annual exclusion. Now, for those of you planning to contribute to Roth IRA or a traditional IRA, keep the deadline in mind. In this case, you're not at a 12/31 deadline. You actually have until April 15th, 2026 to make contributions for the 2025 tax year. We don't typically recommend waiting until the last minute, but if you do, be sure you indicate the contribution year so that everything is coded correctly, because if you make your contribution in 2026 and it's for 2025, if you go back into your transaction history, you might say, oh, I put in my, $7,000 for 2025 or for 2026, and it was actually your 2025 contribution. You should also be aware of one other snag. So some custodians, firms like Fidelity, Vanguard, may place a 7 to 10 day hold on deposits. So If your bank is only linked to a non-retirement brokerage account and your plan is, oh, I'll just put money in there and then I'll move it over to the retirement account, you could miss the deadline if the custodian that you're working with implements a hold protocol. So as we wrap up the year, take a moment to review your notice of initial determination from the Social Security Administration, make your gifts and schedule your IRA contributions with enough time to spare. A little preparation now can save you a lot of stress later. So let's finish the year strong and we'll see you in 2026.